Now, generally, when people are looking at butterflies, they're looking at it from a longer term point of view. And that's how they're looking at it. But when you're smashed up into that very last day, there's a different dynamic that's going on. Whether volatility is rising or lowering, by the time you get near the end of the day, it really doesn't matter, because the only thing that matters at that point is time. Time is fixed. No matter what happens with volatility up or down, it's going to have very little effect on the rate at which volatility or premium is decaying or not decaying. The only thing that's going to really take hold at that point in, say, the last hour, 2 hours, is time. Time just totally trounces volatility, so you just don't have to worry about it. However, in the beginning part of the day, it can make a substantial difference in terms of the cost of your trade, and so that's important. Now, you may think that, well, what about price movement and that type of volatility? What if the Fed surprises and the market, shoots up or just spikes down? What do you do then? Well, even then, we don't really care that much, because first of all, we go into the day with a fixed risk. We know exactly what our risk is going to be, and whether the market goes up or down or stays the same, our risk doesn't change. Now, one thing that could change prior to us getting into the market is the amount of risk that we might want to take. So generally, we're putting on these asymmetric trades that have asymmetric risk to reward, and basically what that means is that we take very tiny risk and are going for a very large potential reward. With the butterfly, you can look at that as being about 1 to 9. 1 part risk, 9 parts potential reward. What are the chances of us getting the 9 parts reward? Pretty small, something on the order of 5 to 8%. But that's big enough, because even if we're within 10% of that area, which would give us a much higher percentage of being able to get a good fill or a good return, it's still going to return us, 70 to 90% of the total premium that's there. So you don't have to pin a trade in a butterfly to make a lot of money. You just have to be somewhere close. I mean, who wouldn't want to take $800 home on an $100 bet? So the key, though, is capital efficiency, and that is at what price can you get in on. Give this video a thumbs up, and if you're not already subscribed, subscribe.